Excellent.
Wow,
So recording is now in progress. You can go ahead and share your screen. Thanks everybody for the troubleshooting.
amazing. That was easy. It's usually harder to fix it like that. That's
I
good.
know.
All right, great. Well, thanks for having me. We're going to talk about fundraising here. Um, just as my very quick introduction, my name is Nathan. I run a startup called Founder Suite. We make a platform, a software platform for raising capital. Um, we have close to 3,000 startups on the platform now, so getting some pretty good action on here. And our customers have raised $3 billion. But before doing Founder Suite, I spent 10 years running a business called Venture Archetypes, helping companies raise capital. And then before that, I was doing some investment banking, also helping companies raise capital. So this talk is just a lot of things I've picked up along the way, and hopefully you can pick up a few nuggets. So when I launched Founder Suite, and we're going on 6 years now, I went out there to raise some money for it. I had this idea: let's build software to help companies raise capital. Went out there and launched it, and here's our original UI. I look back at our first designs, and they're just very cartoonish and looked really stupid now. But as I think it was Reid Hoffman said, if you're not embarrassed by your first version that you launched with, you're waited too long. Anyway, launched it and then went out and started to talk to investors, and I was getting nowhere. No investors were interested in investing. So I went back, spent another 3 to 6 months, I forget, kind of working on it, went back out again, talking to investors, still had no luck. And so I went back to the drawing board one more time and just kept working on stuff, getting some, traction with customers and stuff like that. And I realized if I want to do this, I want to, live my dream and launch this startup, I've got to raise some capital. And so I made a commitment, like I'm going to talk to everyone I can. I'm going to leave no stone unturned. Everyone in my network is going to, hear from me. And, ultimately, third time's a charm. I got this seed venture fund to come in and lead our seed round. And I also got some great angels, but it was really, really hard. It took me 3 tries. And I had been helping companies raise capital for a decade. So that's it. And I learned a few things from that experience, right? Number one is fundraising is a numbers game. You've got to talk to a lot of investors to find the ones that are believers, that are interested in your type of deal. In our case, I pitched on that third case, I pitched over 200 investors and ended up with 1 seed fund and 10 angels. That's about a 5% conversion rate. That also means I got rejected 95% of the time. Number 2 here is fundraising is a relationship game. You've got to get to know investors, and conversely, they've got to get to know you over a period of time. Typically, you don't pitch them on a Monday and they write a check on a Friday. I mean, it occasionally happens that fast, but not really. Most investors that wrote me checks, I either knew or got to know over a period of a couple months, where we got to know each other and they saw how I was acting and building progress with the company and all that stuff. And the number 3 here, fundraising is really a sales process. If you think about it, if you've ever been in like B2B sales, you build a list of targets, you engage with them, and ultimately you're driving all your prospects or targets towards a yes or no decision. That's the same thing with fundraising. So we're going to cover that in a little more detail. If we think about fundraising as a sales process, we can also think about it like a pipeline or funnel, where you're building a large list of potential investors, you're screening, filtering, qualifying that list, you're finding the right person to pitch at each venture fund, you're getting warm introductions to those people and those funds. Those intros lead to pitch meetings. Those pitch meetings lead to due diligence and term sheet negotiation, and then ultimately you're selling shares of your company. So really it just is another sales process. And so I'm going to kind of take what I learned from those lessons and unpack it a little bit. So one of them was fundraising is a numbers game, right? Which means you've got to be engaging with investors at scale. I already told you my story. I pitched over 200 investors. 5% of them came on and wrote a check. That's very typical. So how do you build a list of 200 to 300 investors? I won't make this too much of a sales pitch, but in our platform Founder Suite, we have a database of 200,000 investors, and you can go in and search by type of investor, like angel, VC, family office. You can search by industry. I think there's about 2,000 different industry tags, like medical devices or fintech or whatever. Or you can search by location. And typically, when you build a list, start with industry. Maybe you're in fintech or medical devices, start with that. You look at the list and you click through, do a little more research on each one, click through those icons at the top, which will take you to their web page, take you to their Twitter feed. Just do a little more research. You're looking for clues that they invest in your type of business or that they don't. But if you find someone that looks like a pretty good fit, you can click add to CRM and it's going to drop them onto your CRM. Crunchbase is another good place to start this hunt or start this search. You can do some general searches on Crunchbase, but the way I like to use Crunchbase is I make a list of 10 or 12 companies that are similar to mine, but not directly competitive. So similar types of companies that have raised capital, and I plug each one into Crunchbase one by one, and I see who funded them. So eShares, which is now Carta, is kind of in the same category or sandboxes as Founder Suite. And so if I'm raising a seed round, I might add Draper Fisher and Ella Fund and Andy Palmer to my target list. Lots of other places to be building this target list. This first bullet here, these are newsletters you can subscribe to. And when a startup raises capital, they announce it in here so you can see who's getting funded. Also, when a venture fund raises a new fund, they'll announce it in these newsletters. And so you see, the best venture fund to be pitching is one that just raised a new fund. So they're free, subscribe to them, skim them every day, kind of just get up to speed with who's getting funded. Conferences can be pretty good if you're in a niche space like blockchain or cannabis or, fintech or whatever. Go look at the conferences that have happened over the last couple of years, and you'll probably find some good investor leads. Quora, TechCrunch, Medium, these should be obvious. You guys are probably all over this already, but Twitter is really interesting. People, VCs, investors are really, really active on Twitter. So start to follow investors as you find good ones, and then Twitter will recommend others and just start to engage with them, right? PitchBook and CB Insights are paid databases. I don't know if you have any access to these through your university. They're very expensive. They're like $20,000 a year, so out of reach of most startups, but they have really good deep data if you guys have some access to it. AngelList is another database. I can't tell if AngelList is still enabling their investor search. It seemed like they took it away for a while, so at least explore it. And then I'm going to show you 2 quick ways to mine your own personal network to be adding to your target list. Sang Lee, thanks for the question. Hold that question to the end. Let me come back to that, but it's a good question if you don't mind. So let me go to LinkedIn. And so again, we're just still building a list of potential investors. So this is my home page. Now, what I'll do here is just come up and do a search on something like angel investor and then click people. Now, this is saying there's 68,000 results. So that's obviously too large a list of results. So I'll apply some filters. And really the hack here is to apply like 2nd degree filters. And then this should be interesting. I've never done a search. Let's try this, I guess. Okay, so this is much more manageable. Now there's only 239 results. This means there are 239 people who have the word angel investor in their title or headline that are in the Chicago area that I have at least one mutual connection to, right? They're all 2nd degree connections. So I should theoretically be able to get in touch with any of these people because I have at least one mutual connection to them. But that doesn't mean all 239 people are relevant for my type of business. So again, I'm looking for clues that they're either relevant to me and my type of business or not. I think of my business, Founder Suite, as it's SaaS, it's software as a service, it's kind of fintech, it's SMB software. And so I'm looking for anyone who does sort of those type of categories. And then what I'll do is I'll command click or right click, and I'll open up a bunch of these at once, maybe 20 at a time. And I'll just open up John too for fun. And then I'll just go and spend maybe 30 seconds on each one. And I'm kind of just looking for any clues that this person, that she does my type of deal. So I know, okay, so I'd probably click through to Rankin Family Ventures and see what kind of deals they do. Okay, they invest in B2B software. That's interesting. Okay, so that could be good. I know Portfolio, that's a female focused investment fund, so not relevant for me, but we have a lot of women on our team, or more women than men in Founder Suite. So she's interesting. So, hold her for a thought. Let's go to Andrew Wright for a second and skim his page. So, I'm kind of just skimming their about sections, seeing if there's anything that jumps out. I don't recognize any of these fun firm names. Big data, Neighborly. I might click through to a few of these like deals he's done and see what type of startups they are. I don't know these companies myself. So, nothing really jumps out exactly there. Let's just look at Robert Jank for a sec. So he comes from commercial banking. A lot of times people will either list what they're looking for, or they'll list their previous investments. So you can get a feel for, hey, these guys doing it. It sounds like he's kind of coming from the banking world. Doesn't really jump out like, oh, he's doing like fintech software, maybe, but maybe not. So I'm just going to close that. Let's look at John for a quick sec. And so you see what I'm doing here. I can go pretty quick on this. Okay, here's a good example. So angel investor in SaaS, cybersecurity, data analytics, excluding fintech. So maybe, he does SaaS, but excluding fintech. So I'd probably kind of cross him off and just Command W is going to close his page. So now, I'd look at these guys and let's just say back to, where will she go? So let's say I really like, I've clicked through to her family ventures. I like what she's investing in, seems like a good fit. What I want to do next, I might connect, invite her to connect, but what I want to do is actually add Yiming to my CRM or my investor list, whatever I'm using to collect and build my list. And I also want to make mention of who my best mutual connection is. All right. So I know Yao pretty well. So I would mark Yao down as a connector. So again, I'm adding Yiming to my CRM and I'm adding Yao in the connector field to remind myself to ask Yao for that intro when it's, time to do so. And I repeat this process with Andrew. I'm adding him to my CRM. And then I know Michael so I would add Michael as the connector. So that's how to use LinkedIn to, again, we're still building this target list investors. Now, let me show you one other approach I did that was pretty effective. Sorry, wrong pipeline. So this is a Founder Suite pipeline. This is just a demo account, but the point is I want to show you this column. This is my investor pipeline, right? These are all investors I'm looking at, talking to, et cetera. What I did when I raised capital is I came in here, I made a column, and you can do this with some other CRM program or even an Excel sheet. It's really the concept I want to explain. I made a column. I called it Steve B Leads. And Steve Bennett is a real person. He's actually a professor of entrepreneurship at San Jose State. He's very well connected. And so I made a column. I invited Steve in to be a member of my account and said, hey, Steve, I'm building my investor pipeline. I've made you a column. Can you add some names from your network of people that you'd be willing to introduce me to. And he did. He added like 10 names to his column. And I repeated this process with 5 or 6 other investors, or sorry, 5 or 6 other advisors and mentors, and generated about 50 or 60 good, strong, warm intros by having a structured way of asking my mentors to open up their Rolodex. Okay, so like Yoda says, you start this process of searching and filtering around, you'll start to kind of find investors all over the place. Okay, so let's keep with our magic formula. We talked about the at scale part, meaning we're trying to get like 200 to 300 investors on our target list. Now we want to really focus on the highly targeted part. And this is important. Yeah, the come on board. Thanks, Nick. So the highly targeted part is important. So going back to kind of fundraising as a sales process, the best salespeople don't just chase and pitch everything that comes in the door. They qualify them. They make sure they're spending their time pursuing like well-qualified leads. And we want to do that with investors. So anyone who's invested in a competitor, just cross them off their list. If it's a venture fund and they haven't raised a new fund in the last couple of years, they're probably only doing follow-on deals to their existing portfolio companies. So you might cross them off your list. If it's an angel investor and all their deals are from 5 years ago, they might be taking a break. You might cross them off your list. And then, of course, wrong sector, stage, geographic location. If you're finding an investor and let's say they're in New York, they look good, but they say on their website that, we invest in New York metropolitan area startups, and you're in Chicago or somewhere, there's no point. We found a really good firm that was up in Seattle, and they look perfect on paper. And then when I dig in a little bit, they say we invest in Pacific Northwest startups. All right, well, I'm not based there, so I kind of just left them off. And then last but not least, bad reputation. We're trying to build some user reviews in our database around investors. Once you take investors' money, it's very hard to get them out of your company. They're there for the next 8 years of your life, and investors can make your life pretty hell. So you want to be choosing carefully, basically. Anyway, so don't skip this step. Spend time kind of removing poor fit investors from your target list, so that what remains on your target list or your CRM is a really highly focused list of investors. This will make your fundraising go much more efficient if you've done the research and qualify your list. Now we want to find our best mutual path to each investor. I showed you some of this already using LinkedIn. And then, typically you go back to LinkedIn and plug each investor into LinkedIn and see if you have any mutual connections. If you don't have anyone in common, the best little workaround here is to look at what Tim's invested in the last like 6 months or 12 months. And then look up and cold email the founders he's invested in, and just get a dialogue going with them. Like, hey, I see Tim put some money into you. I'd love to hear what it's like working with Tim. Is he helpful? If you get a dialogue going with these founders, it's okay to ask for the intro to Tim, because Tim, spent 3 months getting to know that founder. There's a strong level of trust there. And then founders are really good about helping other founders out. And they were doing exactly what you're doing now, hustling for intros. So it's a pretty good way to get intros if you don't have a strong network. There's always, as a backup plan, there's always the cold email. However, a lot of these investors are getting 50 to 100 warm intros a day. I'm not kidding. And so your cold email, if they even look at it already, it kind of has a negative, stigma to it. So, there's a great little article at the bottom of this page. If you see that link, Brad Feld is a VC in Boulder, Colorado, and he just wrote this post about saying no 100 times a day. It's pretty great. You would not believe how many startups are chasing all these investors every day. So that's why the warm intro, a lot of them will use who introduces them to kind of cut through the noise. Anyway, let's see. Oh, and then let's see. That board's name is Founder Suite, by the way. So I just told you kind of the hack of reaching out to other founders that investor invested in, and here's a great little template for that. Hey Jennifer, how's it going? I saw you raise from Tim. They're pretty high up on our target list. I was wondering what it's like to work with them. A couple quick questions. Would you be able to get on a quick call? This is a real email that one of our customers used. I'm 19 and we did 1.5 million in our first year, but this is revolutionary. Like, this is a great little cold email to those founders. I'll have to follow up with him and see how he's doing. Okay, so now we've built that list of investors. We've qualified them. We've mapped our connection paths. Now, I used to build these spreadsheets for startups, and I'd load all those investors into the spreadsheet, and it can work okay, but it gets pretty messy pretty quickly. So that's why we built Founder Suite. So this is my last little kind of, sales pitch. I guess it's not quite the last, but this is basically what it looks like, right? It's this Kanban board for managing a whole set of investors, and you can just move the investors around the board as you're making progress with them. And hopefully you're starting to move investor cards into the committed column. In reality, you're going to be moving a lot of investor cards into the said no column. That's just the way it goes. But it's just a good way to keep track of all the actions and tasks and notes, the emails. We kind of call it like your single source of truth for all the notes, tasks, activities, files, emails with each investor. You really need some way of staying on top of all that. So that's what that's for. Now, maybe you already use some other system. That's fine too. But I strongly just recommend having some system for staying organized and managing all these investors that you're about to be engaging with. Otherwise, you'll go crazy. Things will slip through the cracks if you don't have a system. So just before you get out there talking to investors, make sure your pitch is really, really good. I'd say the number one reason I see startups fail when trying to raise money is their pitch is very confusing or just bad, right? Confusing, cluttered, doesn't have a story arc. It just needs to be a really crystal clear, super simple story about your business and the big vision that you're aiming to achieve. So practice your pitch with 10 to 15 other founders, people who will give you honest feedback, who will really critique your pitch and delivery and everything else. Do that before you start talking to investors. And then make sure you, and by the way, we have a really good post on our YouTube that's like pitch deck archetypes. It goes through a bunch of different storylines you can use for your pitch. So look up Founder Suite on YouTube and you'll see our pitch deck how-to video. It's really good. Also, I recommend making sure you have a financial forecast, just showing, and obviously you're just about to learn some of this stuff, but with Nick, but showing how you're going to spend the investor's money, where it takes your company, what your business model looks like, and if you can get into unit economics around your business, how much does it cost to acquire a company? What's your lifetime value? You're going to be, excuse me, really prepared to go raise money. A killer pitch deck, a great financial plan, and maybe an executive summary too, are things you need. Excuse me, just a sec. So that's that. Now we're ready to start talking to investors. I'm going to skip over a few of these kind of quickly, just so we have an example of an email to one of my power connectors, just asking if he's willing to make intros to people I see he's connected to on LinkedIn. So he can say, hey, I'm basically asking Jeff if he knows these people well enough to make an intro. He can just say, yes, I know Jessica, I know Thomas, I know Kyle, I don't know the other people. For everyone he says, yes, I'm happy to make an intro, I put together a new email thread that looks like this. And notice how short this is. This is my intro request email. Notice how short this is. Jeff is my connector, right? Jeff, can you introduce me to Clint? Clint's the investor I'm trying to get an intro to. The subject line, very important. You see up here, Founder Suite seed round, FFVC leading. That meant we had a lead investor already. Put something exciting in the signature line. Maybe it's your growth rate. Maybe it's a partnership deal you just signed. Something that's going to make them open up this email, right? Because a lot of, like I said, these guys are getting 100 of these a day or more. And so you want to make sure they actually look at your email. Then let's look at the body of the email. Jeff, good chatting with you. As mentioned, I'm raising a seed round. This is what we do. We make this investor management platform. Here's a link to our website. And then the ask, could you introduce me to Clint? And then kind of why. He's got a good track record in fintech SaaS. And then I noticed this guy went to the same very small college my dad went to in Iowa, strong alumni base. And so I just put this in here to personalize this a little bit, right? Make it feel a little more personal, not like a big spam blast. And then I included a link to our pitch deck. And this is actually not our full deck. This is our, what I like to say, a teaser deck. And this is hosted up on Founder Suite. Founder Suite has a pitch deck hosting tool where you can upload your deck. And it is basically 5 slides. So it's problem, solution, market, traction, and team, right? Problem, solution, market, traction, and team. Super short. That's all it is. But that way, Clint can click through and kind of get a feel for who we are, what we're doing, our stage. And if we're not a good fit for him, then he can just say, sorry, Jeff, I don't really think this is a good use of my time. And that actually saves me time, because I don't want to be wasting time like trying to pitch investors that are just not interested in what we're doing. So I actually like to use this as a way to kind of filter and screen the investors. And then if he does like what we're doing, I'll set up a meeting. Also, because it's hosted up on Founder Suite, I can see, did this investor click through? Did he look at our deck, and how much time did he spend on it? And that way I know how to tailor my pitch a little bit. Okay, so now it's hustle time. This is going a couple years old now, but HBO Silicon Valley is a comedy. It's a fictional comedy, but it's so funny. Watch season 1, where Richard's the guy in the center here. He wants to be out raising capital. What he really wants to be doing is writing compression algorithms for his company Pied Piper, but he's got to get out there, media investors, and these investors are all really smart. I think I read a statistic that 40% of all VCs went to either Stanford or Harvard. Many of them have pretty big egos, and like investing is what they do, day in, day out. So it can be kind of stressful. So you've got to, as I like to say, channel your inner hustler. Even if you're not a natural hustler, you've got to figure out how to become a hustler. And hustler is a weird word, but I mean, be able to hustle and kind of treat it like a game, I think is helpful a little bit too. Let me just see if there's anything urgent here. All right. Yeah, I like that, Nick. Yeah, exactly. Wait. So you've got to treat it like a game, kind of have fun with it. You're going to be meeting some pretty interesting people. And then just a couple hustle tips here. So doing the introductions or in parallel, meaning asking your connectors for those intros to investors all about the same time frame. We call that blitzkrieg approach. And what you're trying to do is just get momentum going for your deal. Investors will often ask you in the pitch meeting, like, hey, how's the round coming together? And you want to be able to answer that with something like, pretty good. We just started our fundraise a week ago. I've got 10 pitches set up this week. I've got 12 set up next week. We're running a pretty efficient process here using Founder Suite, of course. I've got a timeline, in place. We're aiming to close. We're aiming to get our first term sheets by end of March, and my goal is really to try and close this round by, mid-April, something like that, right? You're signaling that you've got interest, other people are interested to taking meetings with you, and that you're running a pretty professional fundraising process. So, and as you get like term sheets, then you can replace that. Like, hey, I've got 6 meetings this week. I've got 2 term sheets coming by Friday, I believe, et cetera, et cetera. So you wanted to be signaling that you have momentum. Your pitch deck should be getting better and better. Bring your co-founder or a mentor to the first couple meetings and just have her write down every question the investor asks, and then go back and you can make a appendix slide to answer those questions. So your pitch should be getting better and better. And then the process here, we talked about kind of signaling to other investors that things are in play. Then my favorite hack of all, I think, is sending a regular company update to everyone in your pipeline who has not told you no. So let me repeat that. Everyone in your pipeline, everyone on your target list that has not told you no should be getting a regular company update. And I'll just show you a super quick example of what that can look like. So let's see. So we have a tool for this conveniently, but this is just an example of what this can look like. And this, of course, be your logo, your photo, a little. So here, this is as short as it is. Look, notice how short this is. Okay, very short. It's a 1-page deal. A little bit about what you do. Just summarize it up here, what you do, maybe an exciting statistic or metric. And then get into your key wins. What happened last month that is exciting and making progress? It could be new customers, it could be new product launches, it could be some press you got. Then some metrics, put some metrics in there. And then include a screenshot of your product, whatever it is you're doing. And then kind of talk about what you're going to be doing next month, right? Next month, we're going to be working on 2 distribution pipelines, et cetera, et cetera. And then include a team shot. So a photo of your team in basically every update. And that's all it is. It's short, easy to write, shouldn't take you more than 20, 30 minutes or less. And you're sending this out to investors over time. They're seeing your progress. They're seeing you make progress. Hopefully they're seeing your metrics get better and better, a little bit better every month, right? That becomes really interesting to investors. And even better if you can start this process like 6 months before raising money. So you reach out to these investors and say, hey, I've been following you for a while. Really like what you've been investing in and some of the stuff you're putting out on Twitter. I run this startup. We do XYZ. We're not raising money right now, but we plan to be raising, Q3 this year. We do a 1-page company update once a month. Can I have your permission to send it to you just so you get an early access or early view of what we're doing? You get to know us a little bit and get a sneak peek of what we're building. And most investors, because they're kind of driven by FOMO, will give you permission and you start to send this update out in advance. So it's a really powerful way to kind of nurture relationships in advance. Let's see here. And then last but not least, this bottom point, it's really stressful. You're hustling for intros to investors. You're doing these pitch meetings that can be very stressful, right? You're getting rejected a lot. It's just the way it is. So just don't get too stressed out about it. Try and find ways to cope with the stress. I actually thought I was getting an ulcer when I was raising money. I didn't get an ulcer, but I thought I was. Take up yoga to counteract it or something. And then, kind of the last part about our magic formula is, again, the key is nurturing relationships with highly targeted investors at scale. And so those investor updates that I just talked about, sending out a monthly company update, is a great way to nurture those relationships. And because Mark Suster is a VC, very popular VC, because the reason this matters is because it goes like this. Investors typically don't invest on your first meeting. They want to get to know you over, a period of time, over a few months, and see your progress. And so that's why you start this process early, right? Before you even need to raise capital. And even better, you're sending them a monthly update. Maybe you can hop hop on a quick Zoom with them and ask for some feedback on something, or, maybe treat them to coffee or provide them some value so they're receptive to you, right? That's really powerful. I'm going to skip a few here so we have plenty of time. This is just a slide. If you don't have a lead investor, there's some ways to kind of create a party round. I do want to touch on this before we kind of open it up for Q&A. But okay, let's take the scenario. You followed along these steps. You've been hustling and fundraising for a couple months now. Every time you meet or pitch an investor, make sure you actually ask how interested they are. For example, something like this: hey, thanks for taking the time today. Really great to meet you. I would love to hear what your typical check size is, and what your interest level is in Founder Suite, and what are next steps. And then just stop talking. And most investors will give you a pretty generic answer, but if they give you an answer that has a next step in it, like, hey, I like this, let's set up a meeting with our partners next Monday, that's a really good buying signal. And then number 2 here, the second bullet, same thing. Don't walk out of that room or don't end the Zoom until you've said something like, I would love to hear how you help your portfolio companies. I'd love to hear how you would help me build Founder Suite. And then just stop talking and make them actually pitch you a little bit on why you should let them into your deal, right? Because every investor that's been investing has lost out on a competitive deal where there are more investors trying to get in. So make them pitch you a little bit. And as you get momentum going for your round, they will intuitively sense that this deal has momentum, and they have to actually hustle to get into your deal. It's really powerful. You'll know it when you see it. Okay, number 3 here, expect multiple meetings before you get a term sheet. But once you get a term sheet from an investor you like, you can use that to tell all the other investors, hey, I got a term sheet. Let me know if you're interested in putting down your own term sheet or coming in on this deal as a co-investor, et cetera. You can use that as a catalyst. Number 4 here, it actually can be hard to get a no. A lot of investors will kind of string you along or ghost you, or use a phrase like, oh, I like it, but you're too early. Actually, I just want to show one thing really quick because it's kind of funny. I actually created a column in my pipeline. So I have a said no column. Those are people who are just like, no. And then I have a no response column. These are people who kind of ghosted me, right? Just stopped responding for whatever reason. That is a version of a no, right? Ghosting you is a no, but maybe you still keep them on your investor update distribution list, so they're still hearing about you. And then you also get people who are like, I like it, but you're too early, keep in touch with your progress. That is also a no, right? But that's a not right now type of no. So I have a column for kind of those types too. And again, I would keep them on my company update distribution list. I would still send them my investor updates, but it is a no when someone says you're too early or not right now. So, and then last but not least, if you're going to raise capital, just make sure you keep your foot on the gas pedal until the money's actually in the bank. The stupid joke I always say is, how do you know when an investor says yes? When their check clears or when their wire hits your bank account, right? Everything before that is just a maybe, right? A term sheet is a maybe. Even when an investor says yes, that's a maybe until the actual check is in your bank account. So keep your foot on the gas pedal, get over the finish line. Please be thinking about your questions. Let's just put this in perspective. Make sure if you raise money, that gives you whatever, 12 months, maybe 18 months of runway. That means you need to start fundraising again in six to 10 months, basically at a higher level of expectations. So, get out there, have fun with it. We've got a great deal. I think we had some other codes too, but if you want to use our platform, you can use this code Kaplan for 40% off an annual plan. That's a really good deal. And then we've got a podcast that I want to plug really quickly called How I Raised It. It's on Spotify and iTunes if you just search for How I Raised It. And it basically interviews with founders on how they raise capital, and you get really inspirational stuff. So check that out. Also our YouTube, if you look up Founder Suite on YouTube, it's just good stuff. Here's my contact information, but let me plug the YouTube just split sec. I'm sorry to do this. I know it's very self-promotional, but I just want to show you what I like about this. So there are some great videos here. There's a version of this talk, which is basically the same content, but like this one, this is basically like minute by minute how to run a pitch meeting. This one is how to like pack your schedule full of investor meetings. This one is how to like really build your founder network to get those intros. So just a lot of really like deep stuff on fundraising. So check some of these out. And of course, love the likes and comments and all that good stuff. All right, let me stop screen sharing and let's see if we have some questions.
First of all, everybody give Nathan a hand, whether it's chat, and put some comment in the chat. Give him a little chat bomb there, everybody.
Yeah.
So say thank you.
Thank you.
Awesome.
Well,
yeah, fantastic presentation, Nathan. Really appreciate it. Love how you actually show doing the work, and like really appreciate you going into LinkedIn and showing what it takes, because I think that's often where the disconnect is like in theory, a lot of things make sense, but seeing it practically acted out is super helpful. Awesome. And then if anybody wants to go ahead and you can unmute yourself and ask a question, or you can ask a question in the chat. And we've got some time for Q&A.
There's a couple in the chat, Nathan.
Yeah, I'll start with Sang Lee's question. Could you give some examples of similar but not competitive companies? There's always going to be a gray area, because you want to find companies that are as close as yours as you can without being direct competitors. And I use like Carta, eShares. I use that eShares / Carta as an example. They're doing cap table management software. They also have an investor update tool. So that product is actually a competitor to ours. We're both very similar and almost competitive, but not quite, right? So it's like, it's hard. There's no like hard answer to this question. You just have to kind of feel it, and we know it. And if you find an investor, but they've invested in a company that's maybe competitive, reach out to the investor and say, I see you guys invested in XYZ. If you feel what I'm doing is competitive, please just let me know. Let's not have a conversation. Sometimes you even put it to the investor to kind of opt out. Okay. Yeah, Nick, fundraising a full-time job. It's really, it really can be. And actually, I'll comment on that for a minute. Like, even on our podcast, we've had a few guests on our podcast who did some really clever things. Like they would give all their duties to their co-founder for 2 or 3 months, like take over my job so I could just focus on fundraising. I know another woman hired like a kind of a fractional COO to handle all her duties so she could just go in hard on fundraising. So really good, important. Maria Mahmood, this is a good question. How close are you to your network to whom you're asking for investors and warm interest? Yeah, that's a great question, because I mean, even like with mine, I found a lot of folks like, oh, I see you're connected to so-and-so, but I don't really, I don't know you that well. I'm asking for an intro, but I don't know you that well. And then a lot of times people will be like, oh, I don't actually know that investor very well. So that's pretty common. I think you just got to ask, and maybe they ignore you. Maybe they say they don't know that investor. That's okay. But right, if you don't ask, you don't get it. So I wouldn't over obsess about that. Obviously, the more you can optimize for finding those intros or connection paths with people who really do know you and really know the investor, that's the perfect scenario. Or even better, I used to include in this talk a little like hierarchy of the intro, and I'll say it really quick. There's a hierarchy of who to ask for the intro. The best person to ask is someone that made that investor money in the past, right? They'll take those intros all day long. Second best is someone who maybe they've co-invested with in the past. Third best, I think, is that company founder that they've invested in fourth best is what I call professional connectors, like the biz dev guy at the law firm who makes lots of intros, but they're not always a strong connection. And then, fifth best or whatever is someone that an investor just met at a conference 2 years ago. They don't really know each other. That's a pretty weak connection. So you're always trying to find the strongest connection. Okay, great. Okay, Jim has a question here. What's your take on offering your own term sheet for a price seed round? Yeah. Well, I think that's fine. I mean, I think a lot of times when you find a lead investor, they'll want to negotiate or price the round. So sometimes, there's a couple of different answers to this, really. Sometimes I think it makes sense to just go out saying, I'm raising XYZ, I'm raising $2 million, and then wait till you get interested parties. They might ask what your valuation is, but the terms and stuff like that will come once you get someone really interested and wanting to lead the round. So I might not go out with like your full term sheet and everything else, but maybe just an idea of how much you're raising and have some answer to the question of what sort of valuation you're seeking. And I'll give you our example. Like I actually started out raising a 500K round as a convertible note. And then once I found this one seed venture fund, they wanted to do a price round. So we scrapped the note and basically said, all right, let's do a price round. And we negotiated that. So we kind of threw away the note and did a price round. And that's fine. So I would just be a little flexible on that. And, now the one exception is if you don't have a lead investor, but you have a lot of interested parties wanting to put in 50 to 100K checks, then you can kind of create your own term sheet and go to everyone and say, hey, here's our terms. I would put out kind of the terms once you've got like the round conditionally committed from everyone or soft commits from everyone. We can go into that more if you want. Thanks, Jam. Thanks, Maria. Christopher, nice comments here.
And then I think we've got a hand raised from Vinay. Vinay, if you want to go off mute and ask your question.
Go for it.
Nathan, nice to meet you. And firstly, thank you so much for that presentation on Founder Suite. Kind of wish I knew about Founder Suite before signing up for Crunchbase a couple of months ago, but I will be signing up for Founder Suite. My question is, as part of our investment raising strategy, we want to raise money for salaries for myself and my co-founder. We're both full-time employees right now at pharma companies, and we want to do our startup, full-time. And so I wanted to know, like, how do investors feel about that? Like, when you are including, money requirements for, the founder's salaries as part of like the raising the funding round and things like that. And what kind of equity should you expect to kind of give up in that scenario?
Yeah, listen, I don't think it's unreasonable to have a salary for yourself. But don't expect to keep your pharma or big co salaries. I think a lot of people, I came from investment banking and then went and did a startup, and it's a dramatic pay cut. Let's put it that way. Like a third or something. I don't know. And there are, I'm not like even current on what seed round salary should be. I'm sure there's people out there posting data about that. Even Carta, the sort of quasi competitor I mentioned, I think puts out some like compensation data. Anyway, figure out what's a reasonable salary and bake that in there. But also think about like the more you pay yourselves, the less runway you have to, kind of keep this thing alive. So if you're over optimizing for trying to take a salary, investors are going to be turned off by that. What was the other part of the question? How much equity?
Yeah, could you expect to give up in that scenario if you are asking for, a salary as part of the investment round?
Well, so that's sort of a different topic. I mean, you're going to be expected to give up different chunks of equity at each different round, right? So seed round might be 15 to 30%. Series A might be another 25, 30%. Then it usually goes down from there. Maybe it's Series B is 15 to 20%, and the next round is 10, 15%, right? So each round is larger dollar chunks, kind of smaller dilution typically. And especially at that first round, you'll probably carve off an option pool of maybe 20% of the company. So, you know, you can do some simple math and kind of figure out, all right, if we're starting out 50-50 each of the company right now, carve off 20% for an option pool. The new investor wants to take 25%, right? What does that leave you? And you can kind of keep doing that math over a few different rounds, right? Cool. I guess, yeah. Kavoni, you want to unmute?
Yes. Hi, Nathan. I'm Kivani. First of all, thank you very much for the level of detail during the presentation. Has been an amazing experience. I have a question, and I understand it's kind of open and subjective, but we really need to know our investors or prospective investor at least. How can we do a research and investigations without being so stalker or invasive, but having a good research very deeply?
Yeah. It probably borders on stalker sometimes. I mean, I think, you know, let's just keep it simple. Like, let's say you're starting with databases. You're searching in Crunchbase, you're searching in FounderSuite, you're searching in PitchBook or whatever. Or there's a few others out there, AngelList, Signal. You're searching, you're finding people that look interesting, and then, you know, step 2, following them, Twitter. That's no big deal, right? Like, you're just kind of following them, maybe lightly engaging on their posts. Like, that's always good if you've got some insightful things to say. Maybe they've seen you respond to their posts a few times, and then it's time to follow them on LinkedIn. You can either follow people on LinkedIn or you can ask them to connect, right? So that's another thing. And then you starting to see that. And frankly, I wouldn't worry about it too much about being stalkerish. Obviously, you're not. I remember, this is an embarrassing story, but I remember I was trying to get to know this investor one time, and I can't believe I'm telling the story, but like, it was at a conference, and I actually like followed him into the men's room because I saw him going there. And then as we were leaving, I like, hey, you know, it was super awkward, and I wouldn't do that again. But, you know, you see like at different conferences, people kind of, actually, here's a little tactic I'll recommend. So you'll see when an investor is speaking at a conference or event or something, right afterwards, like 20 people rush up to go talk to her, right? But if you can find that person before she goes on to speak and like kind of say hi to her before she goes on, because afterwards she's always mobbed, right? So that's a great little thing I've seen people do. Often, you know, yeah, so I wouldn't worry about it being the stalker.
Looks like we've got another question in the chat from Jack.
Yeah, okay. Any thoughts for online networking events with investors or potential leads, given how COVID concerns? Right. Yeah, all these conferences and stuff have moved online. I think some of them are starting to come back. Gosh, it's a great question. I feel like we started when COVID hit, we started going to a couple online versions of the conferences, and they're so painful. I feel like I haven't sat through an online conference or anything in a long time. Yeah, so I don't have any great suggestions. I think things are coming back. Like, as an example, we went to South by Southwest for a couple of years in a row and met tons of investors there, super fun and active. And then we've been off for the last 2 years, and now we're back to going to live events, and we're going to be doing a bunch of stuff with investors. So I guess my answer is I would just start looking for live events now. Hopefully, knock on wood, you know, things are opening back up, and I think everyone's tired of the online stuff anyway, so it could be a good opportunity. So I don't have any great examples or specific places to check out right now.
Awesome. Well, it looks like that's all the questions. And so
Okay.
I guess we could call it there, give students time to get to their next class.
Yeah.
Thank you again so much, Nathan, for all answering the questions and the presentation. Super insightful, very helpful, and very excited to share the recording out with the rest of the students who couldn't make it in person. So appreciate it. Everybody check out Founder Suite. Absolutely. I think it could be a really valuable resource for everyone here. And we'll call it a day. Thank you.
Beautiful. Thanks, guys. Appreciate it.
Bye.
All right, be well. Thank you.